I'm Arif Siddiqui, a mobile-only bank, and we call it challenger banks. And that has been grown up since last 6-7 years. And these are the banks which are basically not having any branch and using the mobile infrastructure and the mobile. It's a totally a new breed of the banking. It started in Europe 2009, 2010. To just go to the challenger bank, I would like to first take you to what is unbundling of the bank. So CB Insight has done an exercise, and quite you have already seen that presentation. What is CB Insight did it, that if we take out all these things, they are doing it, like whether in a P2P or payment or lending or any other area, how it look like. So what are the areas CB Insight has covered in the unbundling of the bank? So let's see this. So if you see, these are the 15 areas where unbundling is. What I did is, I took out from this whole CB Insight slide, which is mainly for unbundling of the bank, towards only the challenger banks. So what are the challenger banks are and what they are doing it. So I created this infographics where you can see almost all the challenger banks in the world. So these are the banks. Some have started in 2009. Some has started even in 2017. So I tried my best to basically include all the banks which are called challenger bank, all the new banks. So what is the difference between challenger bank and the new bank? Challenger bank is having an official license, either a part license or the full license from the local regulators. Whereas the new bank definition is that they are using the license of the existing bank. So either they came up with the JV. So in the JV, they are partnered with some bank and using the same license for banking. So, but those are not that much. So the total number is around 80 challenger banks in the world. And there are around 12 out of that is new bank. So most of the banks are having the full license. If we go with the country-wise details, so UK is the largest having the largest number of challenger banks. And one of the reasons is the regulators has given early licenses to these people. So some of the banks like Fidor or Adam, they have started in 2008, 2009, the whole journey. And they got a license slightly late, which is 2013, 2014. But they built the bank in between and started some of the offering to the customers too. So the mushrooming has happened more on a Europe. You can see that 40 out of 80 banks is all alone in UK. So when I'm saying is UK or US or Germany, it's not mean that these banks are only in that area. It's mean that they got the license from that country. Some of these banks are having providing the services from multiple places. Like I can give you the example of N26. This bank has currently giving the services from 17 countries. So it is not only in one area. And the banks are giving, registered in one country and then going into the other countries and started giving the services to US is a 5 challenger bank, Canada 2, Germany 2, France 5, India 10. India is largely is the new bank, so it is more taking the existing licenses and utilizing it for that. China is 4, Korea is 3, Japan 1, Vietnam 1, Indonesia 1, Italy 1, Denmark 1, Poland 1. Digital banking, which is a DBS, created it in India. So they launched this in India. That's why it is coming in India, not in Singapore. I'm hearing that now these banks who has already been done good job in UK or Germany or France, these people are coming to the Asia now. Now in the Asia, I heard that there are 3 challenger banks working to come to Singapore. And they want to grow this in Singapore, Hong Kong, Malaysia, Indonesia. So they see the huge value. Now, how it is easy for them to do it, and why it is too difficult for the traditional bank to go to the next or new countries. See, it's all about speed to market and the infrastructure they have set up for the whole challenger bank. It's so thin. Technology can be easily moved. Some are having a database on a cloud. Mostly are using the third-party solution on a front. Mostly are using the APIs. So adding a country or adding a new vendor or adding a new product is so fast that they can be able to go to any country within the 6-month time frame. So if you see N26 example I have given, they are in 17 countries in only 2 years. So 2 years they have gone to 17 countries. I don't think so. As a banker, I know that how it is difficult to go to the new country. There is a lot of work is required. They have to comply with the regulatory requirement as well. So it's not that easy going to another new country. But what I have seen it, these challenger bank is having a very fast track to go to the next country and fast track to come up with a new product. So or the new services. So this is something that I can see is a difference on a speed of market. And I can give you another example, like when N26 did the project for TransferWise. So TransferWise is a large payment network in UK, and they do on a both transfer, cross-border fund transfer, and they do on a netting basis and as well as on a normal fund transfer as well. When N26 had an agreement with them to take their services, they spent only 6 weeks to integrate, to design, to integrate, to test and implement. 6 weeks only. How fast someone can be able to integrate, and this is not an integration in a sense that they have taken a screen of the TransferWise and given it to the their website or their wallet or their mobile and just started it. No, it is completely an integration of the 2 solutions that in their own app it is coming in. There is a fee transparency that how much is TransferWise is taking, how much we are taking it. And so that's what it is. I mean, how fast they can be able to go and offer a new technology. So that is the challenger bank's advantage. I will talk about later on a little bit on that really the customers are moving to the challenger bank, or is there is any disruption they have created yet to the banking or not. But whatever we are talking most of is in the retail banking space, because not much of has happened in corporate banking or private banking. So even if you say trade, we are too far from that we can be able to come up with some very proof of concept with really working among the all stakeholders. And there are companies like R3 is working on a project, or IBM is working on a project on a supply chain of the trade. but it will take another 3 years to come into the market. So I'm not seeing much of any of disruption in the area of private banking and corporate banking. But it will not be the same, like in a sense that as I'm saying that 2 to 3 years the technology will be available and you will see the same kind of challenger banks will start offering to the services to the corporate as well. So, but at this point of time when we are talking about we are seeing some disruption in each area. So I don't want to go and take this like unbundling of the any large bank, which is Wells Fargo or City-like banks, and how 200 or 250 different fintech large companies are disrupting that. What I want to see or would like to tell you about what are these 15 areas. I can select some of the areas and speak about it, so that you can go and deep in each area and see that what disruption is coming in. In fact, already traditional bank is working on the same level. So either they are coordinating with these fintech companies on the same spaces, or they are acquiring the companies, fintech companies, and taking the solution and applying it. The issue which I can see is the time to market. Like normally the traditional bank takes a long time to implement. It's not that they are not aware of that, what innovation is coming, what digital migration has to be happened. Almost every bank is having a digital transformation division. They are having an innovation department. They are having a mobile-only kind of department. But they are taking longer to implement it. And there are reasons for it. I mean, there are very right reason maybe for it, because they have been tuned to that. And last time I said that the mindset is very different in a banking, where they start, when they are offering a product, they start from the compliance. So these are kind of like how they can tune and change the mindset to start from the customer first, and start from the customer intelligent experience. So and also not look into the process and procedures first. So it is a outside in, always I say. So this is the issue, that these traditional banks, when they are investing a huge money on one side, are they basically getting the same benefit from that or not? So this is a question, and this is the timeline. Like the people who are working on what timeline they can be able to provide these services. And second is, because we are, as a traditional bank, we think that what customer is looking for and whatever we develop, sometimes the customer don't like it. So I'm not saying that every innovation or every digital solution go very successfully and customer take up very positively, but sometimes the customer is the decision maker whether they want to use this or not want to use it. So let me come into some of the new banks. So new banks are the banks which are around 12. So list you can see it here. These are the banks which is largely using the license of the existing bank. So even I was not aware of that HSBC is having a first direct bank as using the same license. So the lot of banks here are using the license of the existing banks. And one of the things is, it is not a bad thing to do that. I mean, I feel it is a probably better thing to do that. And why I'm saying this, because there is a lot of time these challenger bank has spent to understand three things. First, they had to get the license, and they were not aware how to do it, and they took years to basically get the license. So that timeline is really not required. If your bank is having a license and you are using the same license, you can be able to take it. The second advantage is that when you go, you can use the same infrastructure. Like sometimes the ATMs, CDMs, and some of the infrastructure they are having it, they can use it. So it is basically, although it's a separate entity, but they can have a service agreement within the two banks, like one of the bank which is a new bank and another is the parent bank. So they can use lot of support and services, especially services in the many areas. The third is that compliance. So regulatory compliance, the bank is fully aware of that what's supposed to be done. And these people are doing for years, in fact, and challenger banks takes a longer time to understand that how they should be able to comply with the regulations. And whenever the new regulation is coming, they have to comply as well. I know that, and I understand that they have a better speed to comply because of the technology they are using. It is capable of to do it faster. But when you are setting up a bank and you have a partner which understands everything on a regulation side, it is much faster speed to do that. And what is the advantage of doing this through a new bank? One of the advantage which I can see is that when you set this new bank, you can test some of the things which you feel that customer will use it. So you are not disrupting the existing bank. It is a huge bank. You think that customer would like to use it, but you are not sure. Never somebody can say that, oh, this is the thing which customer may or may not use it. So sometimes it is basically the customer make a decision. Like everybody gives the example of the Uber and Airbnb. When they came up with the solution, the people have taken very fast, and because it was resolving the society problem, comfort to the people, much easier to do it, people have taken it. So the same thing, like if you are doing digital transformation within the bank, it takes time. It is basically test also. So some of the product or the services which you are coming up with a digital way, whether customer will use it or not use it, it is very difficult to say at the time of pilot or at the same of when you launch. So you have already invested in something, but might not the customer will use it very well. So what this new bank does basically, that on a small scale, they can test all the new bank, like the bank supposed to be in the next 3 to 5 years time, they can having a test bed where they can test these product and services under the new bank to go for. And I feel that this is one of the nicer way to do that. The challenges I have seen that in a number of years these challenger banks are having it, and they have to go with it. I mean, I know that this Adam Banks last year would like to give the product of current account, but could not be able to do that because of the regulations. So I'm not sure what regulation in a UK where they cannot be able to implement it, but the issue is that these challenger banks having a kind of disadvantage on a new bank, and vice versa as well, because when you are using the license of existing bank, sometimes you cannot do certain things which you would like to do. So challenger bank says that we are setting the bank for a future, and it is not the bank for today. So obviously in the next 3 years time, these future challenger bank will do much more, in fact, and the product level. Let me look into another slide which is very interesting actually, and this is something that why the most of Europe these challenger bank came at the first stage. Like why in 2008, 2009, suddenly these mobile-only bank or challenger bank has started and doing things. So one of the thing is that because of the financial crisis, people trust has gone down to the traditional bank. And because of that, these banks came up and started giving the service differently. And they created a more transparencies, they created a efficiency, they created a simplicity. And what they said is that we are setting up first bank for the future, and second, we want to change the overall perception and the way the bank works, and we want to do things differently. So you can see the blue color boxes where the confidence level is greater than 50%. So where and red is where the confidence level is less than 50%. So where is the confidence of the people or trust of the people? I mean, these two are different things, but let's put in a confidence level. When the confidence level is less than 50%, you can see the mushrooming has happened more over there in a challenger bank. So a lot of these fintech companies came up in the Europe. A lot of these challenger banks, P2P, payment companies, lending companies, like lending club kind of fintech companies, they came up mostly in Europe. And the area where the confidence level on a bank was high, you can see that it was slow. I cannot say this will not happen. And let me give you the one example why I'm saying that it will happen. And this benchmark may not be the ultimate benchmark. My view is this is one of the benchmark where you can see how Europe is doing more. And one of the more area is the PSD2. When the regulation came to the PSD2 into the Europe, people was very clear that what is the future of the banking and how the bank's supposed to work. And what is the role of this fintech in the whole banking sector? So PSD2 defined the rules that how each player can play. And that's very interesting because they have given a lot of benefit to the fintech companies or aggregators that they can be able to get the data from the banks if the customer is allowing them. So traditional bank is having a very since last many years, and I have seen it that the most important thing is the customer's data, and we see that customer data is as valid or trustworthy than like currency or the amount they are putting into their account. So now the Europe is saying that any aggregator can ask the data from the bank either on account data or the transactional data or transactions if customer is giving a go-ahead to them. So that is very interesting because banks was thinking or even now thinking that the data belongs to us. Like why I should be able to give data to any of the aggregator or the fintech company. And that has to change in Asia as well in a moving forward basis, because this cannot continue. Of course, there is a always effect starts from the Europe, and then start affecting to the Asia or some of the other part, because then they see the value of it. So when you see that Data Protection Act came in or data protection rules came in, it is mostly mainly implemented first in Europe and then came to the Asia, Africa and Middle East. The same thing is that now this PSD2 came into the Europe, and this year every bank has to comply with. And in Europe, I heard that Hong Kong is looking forward to come up with some guideline how this thing will work. So bank has to understand the thing is changing in the market. Regardless of the trust factor is there, regardless of that, they are also coming and offering some of the digital services. But when you go and really provide the service to the customer, at the end, customer will make a decision how they have to do it. And when these aggregator will come, and I will do a separate sort of talk on PhD too, when the aggregator will come, so anybody who is having an account in a 3 or 4 banks, the aggregator can be able to see in a one screen. And the companies are, these challenger banks, like I was looking into the N26, they are having a product called fixed deposit from a bank. So they are not giving a fixed deposit by themselves facility. What they are doing is they are offering a 5 years deposit, up to the 5 years fixed deposit from the various banks. So they become the marketplace. So what they are doing, they are having a knowledge of all the bank, they sign the agreements with the various bank, and basically on behalf of that bank, they are serving to the customer and giving the fixed deposit. At the bank, at the back, actually some other bank has given the fixed deposit. So this two things. One is an aggregator, fintech companies can come as an aggregator. Second is these challenger bank or these fintech companies can become a marketplace as well. So a lot of marketplace will come. I have seen some of the even fintech companies currently providing kind of marketplace on an inquiry basis. They are really not providing the service or executing it. They are giving a sales lead to the banks at this stage. So this is the first stage. The first stage is always that these people are giving the sale leads to the banks. But what is the second thing? The second thing is how they can be able to go next and be able to start providing the service as a marketplace. So it is similar, like these challenger bank I have seen that coming product by product basis. So they are following kind of Amazon way. So Amazon has started with selling the books. Now you can ask any product in the world, Amazon you can find it. So this is something that is in a 10 years time, how the Amazon has changed them to the selling it to the book, to the selling everything. Now, one of the things which I said that really this benchmark may not be the perfect judgment that why challenger banks or the fintech companies came more into the area where the confidence level was low. You can see the two countries which is very, very large countries, like one of the example is China. So China is among those where very high penetration of the mobiles as per the country. Like in a sense, the country is 1.8 billion people, and out of that, if 63% or 65%, and now I'm hearing it is prediction for the 2018 is 70%. But what is happening today? The WeChat, which is the payment system, where everybody can transfer the money, and it will go more and more. Alibaba is another example which is on SME space. They have done a huge job, and they are having the similar 0.7 million 700 million customers. These challenger banks are those which are very courageous. They challenge to the traditional bank. They are very small. They are not to the large scale. Yeah, N26 I have given the example where they are having in 17 countries, but still they are having 500,000 of the customers. So what I will do next is that I will select some of these challenger banks and unwind them. So what it means? I will go through with say N26 or Sterling Bank or maybe Bank Mobile, which is a US bank, US based bank, and unwind them on a product basis, that what is the product they are offering, what technology they are using it, how much funding they got up till now, and so you can be able to see that where these challenger banks are.